Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers, and the data is in. And today, you guys, is moving day. On the other side of that door is a nightmare waiting for me to finish this video so that I can get started. And this is my day number 6. You guys know that I'm being rushed out of my house, my rental right here, because there's a mold situation and I'm moving into another rental. So I have extended my lease. And the good thing, guys, is that's fine that I've locked myself into another year, because here's the thing, and here's what we're going to read today. More and more people, more and more economists, more and more strategists are now saying that we will continue and once again have a home price correction in the housing market. Now, some people think that that's going to happen this year to many metro areas like Washington, D.C. and Miami and Milwaukee, which is super surprising. But if you've been watching me over the last 2 years, this should be no surprise to you. In fact, we already understand and we know why it's been taking so long. Well, first of all, it's supposed to take long, but we're like, okay, well, why is it taking so long? Because home prices went up, you guys, almost 50% in 2 years at the same time that real income went down. So we have a triple whammy right now in the housing market. And because of that triple whammy, it's just not sustainable and it will fall apart. And that triple whammy is high prices, high interest rates, and low income. And you guys, please don't forget that I am not a financial advisor, even though my bio is as someone that forgot to bring a suit from the new house. So I'm wearing a t-shirt. So today, you guys, my bio is t-shirt guy. And hopefully in the future, we're going to have some bonkers t-shirts. If you guys want some bonkers t-shirts, maybe some hats, something like that. I've been doing this for 2 years, 4 months, haven't sold anything. If you guys want that, let me know. Let me know down below. But either way, you guys, I really hope you like this article. And don't forget, the biggest, most important thing of all is you and your decision to buy. If you're going to buy right now, so be it. But understand, if you do that, if you buy right now, odds are you're buying at the worst time in the housing market. And by doing that, you're going to join millions and millions of Americans that have buyer's remorse and that are trapped in their house. Now, here's the thing, guys. We have a community here at Real Estate Mindset, and there are people purchasing homes. But the people that are purchasing homes in the Real Estate Mindset community, first of all, I beat them all up. So anytime someone says, Travis, I found a house, I'm going to make an offer, whether it's Trey, Johnny, whoever, I private message them. And the first thing I'm like, dude, are you sure? Can't you just wait a little longer? Can't you wait till after the election, till after we start recession? I'm like, Travis, I'm not you. Okay. I have my own goals. I'm good. But my point in saying this, guys, is the buyers are strong. And the type of buyers that we have, for example, Jeff, all cash buyer. Another example, Raymond. Raymond is a sweat equity purchaser. That dude has been working, I think, for 3 weeks straight, 11 hours a day to fix a property up. So the reason I'm saying this, guys, if you want to buy a house, okay, it's really important that right now more than ever, you take a step back and really understand what I'm saying. And I understand as well that things get very, very confusing. And the reason is because things are happening much different in different markets. So again, in Todd's market in Maryland, there's still some amount of bidding wars. There's a huge lack of inventory. But in my market, say in Austin, Austin is falling apart at the seams. It seems like every other day something destructive happens in Austin. So we have to understand that all of the data that we review that is not comps is just macro data. And so if you really want to understand what's going on, you've got to take a break from the headlines. Guys, I get it. I have my own headlines. I have to play the headline game. I hate it. I wish I could just say, learn with Real Estate Mindset today, but people don't want to learn with Real Estate Mindset. People want to know what's going on so that they know that they are safe when purchasing real estate. And the thing that I hate about real estate, guys, and we'll get started here in a second, I hate how professionals use your family against you when buying real estate. They say, oh, if you want to start a family, blah, 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 then you got to buy. That's BS. You guys, I take pride in the fact that I'm a husband and that I'm a father, and I get to be those things regardless whether or not I own a house or if I'm renting a house. So it's really important we are careful what we let in our minds, because when it comes to purchasing real estate, you guys, there's so much happening. When you start that transaction, you have to have a strong mindset to get through that transaction effectively. It is a very scary, very heavy transaction, and there is a massive lack of quality professionals. Okay. So anyways, that's my rant today. That was my moving day rant. I'm obviously emotional and I'm rambling because I don't want to finish this, because as soon as I do, I got to start moving. Let's get started. Oh, and please like the video. All right, so we're going to do a Business Insider article today. The name of the article is "The U.S. Real Estate Market is Headed for a Correction." Now, there's 3 bullet points here, but we'll read this in the article, y'all. Now, this is going to start with America's real estate market could be in for a big correction, the veteran strategist Chris Baltimore. So Chris Baltimore said. The chief market strategist of the technical traders pointed to worrying signals flashing in the real estate sectors as borrowing costs look posed to stay higher for longer. So obviously, again, this is my point. A lot of people are starting to turn again where we lost that momentum in 2023. We picked it up in the middle of 2022, remember? But now people are starting to turn around again and again. But now bulls are starting to flip once again. And it's because of leading indicators. They have to see leading indicators for them to acknowledge it. They can't just use common sense. Those leading indicators is inventory, price cuts, and days on market. Let's get back in. Another point here is very interesting. They're not going to go in too much to the existing home market. They're essentially saying the crash is going to start with new homes. Have you guys heard anyone say that before? Has anyone that you guys know traveled around the nation almost going broke to show you guys what's going on with new homes? Hey, you guys know anyone with that? It's your boy. You guys, I'm out there going broke. I need to start charging for something. I don't know. It's expensive, man. I mean, I can't even save any money anymore. This is crazy. Anyways, this goes on. Construction starts for single and multifamily homes have plateaued after a steep drop last year. A pattern similar to one that flashed prior to 2008 housing correction. So they're pointing out an additional indicator of a recession. First of all, we know multiple indicators, the yield curve inversion, but there's another big indicator, which is unemployment going up. Unemployment has gone up more than 0.4%. Again, that's a signal of recession is right around the corner. Unemployment does not go up. If it does, recession is coming. The stabilization of construction activity is likely due to a burst of investment that's hit the sector. But real estate is still in trouble, especially if mortgage rates remain elevated. And when people say elevated, again, I've been doing this for over 20 years. It's so hard for me to say, yeah, they're elevated when they're really not. I mean, they're back at historical norms. Okay. What's elevated is the price. It's the price. The rates are normal. The price is not. Y'all agree? Seriously, guys, seriously. Okay. Comment below. I need to know whether or not you guys are tracking with me. Okay. Because what you guys learn is important to me. To me, this is a sign that things are really breaking down. And this is just a bounce. He said of the recent stabilization in construction activity, it's the last spot right now where you can squeeze a little bit of profits out of these buildings. The labor costs are up, he said. And then we see the financial sector and real estate pricing really fall apart. Y'all see that real estate pricing? Is he talking about interest rates or the price of houses? Remember, it's not about interest rates. It's about pricing, because it's the cost or the price of the interest rate that should matter to you. Sorry for being so animated today, you guys. I do not want to leave this office because I don't want to start renting. My body hurts. I turned 40. All right. My body's breaking down. I've been doing this 6 days straight. It's wicked. Anyways, while most single family homes in the United States are financed with a 30-year fixed rate mortgage, high rates could pose a problem for property owners who need to refinance sooner. And you guys, this is what I've been warning you about. If you purchased a home prior to 2021, you're probably okay. But if you purchased a home 2022 and after, it is a different world for you. In fact, it's actually those people that are purchasing real estate right now at high interest rates and high prices that can crash the economy, because they're the ones that are most likely to stop paying their mortgage. Why? Because they have the highest payment in history. From a PE ratio, they have the highest price in history, and median income is not going up adjusted for inflation. Those are the people that are going to help the next leg drop. That's the case for many commercial property owners, and the sector will see a $900 billion debt maturing this year. So the article is also pointing out that on top of new home construction stabilizing and not like skyrocketing, on top of that, we also have this little black swan called CRE, commercial real estate bomb, that honestly, it's been exploding, but they've just been taking it. But that stops again when consumers, you and I, stop paying our bills. Continued interest rate pressure could bring on a wave of distress. Commercial real estate foreclosures jumped 117% year over year in just the first quarter, according to data from ATTOM. You guys, we have a massive problem going on in America, and it's not just homeowners, it's the whole financing system. In fact, you guys, and I don't want to go into this too much, I'm so disgusted with banks. So here's the thing. I went through the GFC. I watched banks get bailed out as they kept the collateral. So as I lost my house, that bank got bailed out and they still got to keep my house. I'm upset at the bank, and I'm also upset at the Fed because they promised us that they will not bail out banks anymore. And they did March of 2023. And that, you guys, is part of the reason why we are in the problems we are in now. The bankers are also creating inflation by loose monetary policy. So we have inflation coming up everywhere, when reality is right now, guys, what we need to happen right now, and this would protect some good lenders, not the reckless ones, we need to tighten lending standards if they want to curb demand. So yeah, they're lowering interest rates. That's good. But also change regulations. Make it harder to buy stuff. If you make it harder to buy stuff, especially with quantitative tightening going on right now, you're going to stop demand. And if you stop demand, what happens? We get more inventory. If we get more inventory, that's more pressure on prices going down. But just because it hasn't happened nationwide average doesn't mean it's not, okay? Timing all of this is very, very difficult. But the important thing here is timing your purchase. A lot of people are like, don't time the market, don't time the market. That's stupid. I hate when people say that, all right? It's not about timing the market. It's about finding a great deal that puts you in a situation to get ahead in life, not purchase a home that creates a prison that you can't get out of. That's what happened to me, and it doesn't have to happen to you. Let's get back in the article. In residential real estate, it's unlikely that home prices will crash the way they did during the 2008 bust. However, further weakening could spark a panicked sell-off among, and here's the key, here's what happened with the GFC. This was a bigger component than subprime. A sell-off among speculators or investors who have been putting cash in real estate companies and things like real estate ETFs. You guys, this whole thing can crash pretty much overnight. And I love this. He goes on to say, people don't realize real estate is primed and ready and begging actually for another major leg down. Are y'all listening? Are y'all listening? Are you guys adapting? Are you choosing? Are you making good decisions? Now, they're buying right now because there's been a pullback. But the reality is that I think we're going to see this collapse. You guys agree with what he said? You guys already know what I think. Now, real estate veterans have warned about a correction in property prices for the last year. I'm a veteran. I've been warning about that for the past year, particularly in commercial real estate, and commercial real estate has been suffering. Offer values have plunged since COVID-19 pandemic, dropping 35% through March. The sector likely has more downside on the way as remote workers drive vacancies up and property owners refinance debt at higher interest rates and lower property valuations. In other words, all of this is saying that there is massive distress in the financing system and in the banks. And when there's massive distress coupled with delinquencies for consumers, it goes up in flames, in a burst of flames. Now, I also want to tell you guys that if they lower interest rates, say interest rates go to 4 or 5%, that's not going to have massive effects for buying in every single metro area. It will have massive effects, though, on people selling. Now, I know that because in my market, remember guys, I'm in Houston. Lennar, for example, has already been offering a 4% for the last 2 years, and they still have hyper supply. Just let me show you real quick. And I really encourage you guys to do this. I'm just going to Lennar. And first of all, let me just show you some of the price cuts. So the first one here is $30,000. This next one is over $40,000 price cuts. I mean, they're doing massive price cuts. This is a really big one here, almost $70,000 right there. So they're doing massive price cuts, guys. We know that. But this is what I wanted to show you. Here's one of the offers they're offering right now, which is a fixed FHA rate, okay? Fixed rate, not an adjustable, of 4.25%. And they've been offering 4% again, you guys, for 2 years, and they still can't sell all their houses. And that's on top of a $40,000 price reduction and what? And $6,000 in closing costs. Do y'all see why existing sellers, they cannot compete? And I know that they can't sell their houses because we see it in months of supply of new houses. You guys, we're at 9.1 months. Look at that, 9.1 months. And this is underreported. Don't ever forget, they are not reporting all of the data. This data is generated by a survey. That's right, guys. It's 2024. And all of the new home data that we have, and remember how important new homes are. Okay, it's our source of inventory. New homes are so important. They track it based on people from the builder completing a survey. You guys, we have AI. We have all these things now. How are they tracking this with a survey? To me, that's just going to breed corruption, fraud, and greed. We need, as citizens, and we should demand this, we need and we desire, I believe, let me know if you disagree with me, total transparency. And honestly, guys, I don't think total transparency is a bad thing. And one thing that is surely missing in the industry is forthcoming honesty. If you're a realtor, if you're a brand new realtor, you guys, here's the thing. If you're a brand new realtor, you have an ability to succeed. All you have to do, on top of being good at your job, so understand how to do subdivision analysis, but all you guys really need to do is be forthcoming and honest. And that's really it. And the reason that's all you have to do is no one else does that. Now, other than that, guys, I really hope you guys got some new value, insights, and perspective. And if you're out there investing in real estate, you guys already know I wish you luck. Wish me luck on this move, and I hope you win.